It's time to do another 55-minute trip around the world of business, and it happens only here on Business Incorporated. You're welcome to the program today. Here's what we have for you in the next 55 minutes. Well, a lot of dust has been raised by the Cybersecurity Levy in Nigeria. What does it mean to you and your transactions? Find out on this program. And after days of flood, thankfully, the railway services have resumed in Kenya. Namibia is working on its renewable energy project, and they have some funding from the World Bank. Good afternoon. Welcome to Business Incorporated. I'm Ini John Mekwa. Let's do business beginning from the global space. Oil prices edged high on Tuesday after Israel struck Rafah in Gaza with negotiations for a ceasefire, but Hamas continued without resolution. Brent crude futures were up 23 cents. That's about 0.28% at $83.56 per barrel, while U.S. West Texas Intermediate crude futures rose also 24 cents. That's 0.31% to $78.72 a barrel. Palestinian militant group Hamas on Monday agreed to a Gaza ceasefire proposal from mediators. But Israel said the terms did not meet its demands and pressed ahead with strikes in Rafah while planning to continue negotiations on a deal. Israeli forces struck Rafah on Gaza's southern edge from the air and ground and ordered residents to leave parts of the city, which has been a refuge for more than 1 million displaced Palestinians. Lack of settlement between the parties in the now 7-month-long conflict has supported oil prices as investors worry and regional escalation of the war will disrupt Middle Eastern crude supplies. Still in the global space, gold prices slipped on Tuesday as the United States dollar firmed, while investors await more comments from the Federal Reserve officials for further clarity on the timeline for potential interest rate cut. Spot gold was down 0.5%, $2,313.11 per ounce. U.S. gold futures fell 0.4% to $2,321.70 per ounce. The U.S. dollar index gained 0.2% against its rivals, making gold less attractive for other currency holders. China's central bank added 60,000 troy ounces of gold to its reserves in April, according to data, extending the period of consecutive purchases to 18 months despite high gold prices. Investors now look forward to comments from Fed officials set to speak this week, including Fed Bank of Minneapolis president, who is speaking later on today. Fed funds futures traders are pricing in a more than 67% probability that the U.S. Central Bank will begin cutting rates in September, and according to CME's Fed Watch. And copper prices in London rose above key resistance level of $10,000 metric ton, buoyed by renewed hopes for U.S. interest rates cut this year. Meanwhile, Congo signed an updated agreement in March to its 2008 deal to trade copper and cobalt from a joint mining venture known as Seacoms for Development. And under the new contract published on May the 3rd, Congo will get $324 million for infrastructure projects from its Chinese partners. And then in Nigeria, a levy of 0.5% equivalent to 0.5% of all electronic transactions value by the business specified in the second schedule of the Cybercrimes Prohibition and Prevention Act 2015 is to be remitted to the National Cybersecurity Fund administered by the National Security Advisor. This is contained in a circular from the Central Bank of Nigeria to all commercial merchants, non-interest and payment services banks. The regulation The regulator notes that the levy shall be applied at the point of electronic transfer origination, and it should reflect in the customer's account a cybersecurity levy. And this is set to begin in 2 weeks. That's about May 20 of this month. Financial institutions will remit the levies monthly to the MCF account domiciled at the CBN by the fifth business day of subsequent month. The circular is signed by the Director of Payment System Management Department, that's Chibuzo Efobi, as well as the Director of Financial Policy and Regulation Department, Haruna Mustafa. So obviously, that's a very big deal in Nigeria at this time. That's 0.5% that will be added to what we already pay. So let's see the other charges, bank charges that consumers pay for in Nigeria. If we could have that a slide at this time of the other charges. I'm sure you're familiar with them. There you have them there. So you have this cybersecurity charge of 0.5% of any transaction. You have the transfer fee, that's 10 naira, charge on transaction below 5,000 naira, 50 naira for transactions above 50,000 naira. Then there's the stamp duties also. That's 15 naira being charged for transactions between 10,000 and 10 million naira. There's the short messaging code, that's about 4 naira. There's also a value-added tax on short messaging service, on SMS. Then there's also the VAT on transactions. There's the inflow and outflow fees. There's, of course, the USSD charges. There's your card maintenance fee. That's every month. Of course, when you ask for a card renewal or in the area of thefts or time of theft, that is also, you're also being charged. So that's about 10 of them. I hope I did not miss out anyone, but you can always share that with us. So, I mean, what will Nigerians be paying for transactions? And there I was thinking that the government perhaps was thinking of reducing cash-based transactions and encouraging cashless societies. So if I have to pay 0.5% of the value of a transaction every time I have to carry out a transaction, how attractive is that for me to turn to the electronic transactions? The exemptions being on your salary, if you maybe when you're being paid your salary into your account. But guess what? When you're transacting from your salary to make payments, you will pay 0.5% of that value, you know. And then by the time the person you're transacting, I was talking to somebody before I came in there that if you're going to buy a loaf of bread with your card, that means you pay 0.5. If the seller of the bread is going to transfer the money to the bakery where he or she gets the bread, then he or she will also pay 0.5. Isn't that multiple taxation that we're coming to? Which is why we have that presidential committee on tax reforms, led by Mr. Taiwo Yedelen. I mean, they have sent out a statement to say that they just got this. It's not originating from them. And they're looking into it to also have a conversation from where it's originating from. But let's delve more into this with Dr. Muda Yusuf, who's the Chief Executive Officer of Center for the Promotion of Private Enterprises. Dr. Yusuf, another tax is upon us. And then we were hoping that, it's the ease of doing business. We're doing cashless policy. We're complaining that there's too much M1. I think that's money in circulation and all of that. And now somebody said they're going to go and withdraw their money and start doing physical transactions.
Well, that is likely to be the response of some of the bank customers. Because just as you said, there is enough burden already, both on the citizens and on businesses. And if I may put this in perspective, currently, in terms of taxation, businesses pay company tax. They pay tertiary education tax. They pay NITDA levy. they pay Naseni levy. There is police trust fund levy. And only recently we have been hearing of NYSC levy. Then we're also talking about tertiary health levy. We have stamp duties. All of these are being paid by businesses and indirectly also by the citizens. And at a time when we are grappling with high inflation, we are grappling with high cost of living, high cost of doing business, I think this is not the time at all for this kind of legislation to be thrown upon us, either as business people or as Nigerians. And my concern here is that this is a legislation of the National Assembly. The National Assembly is supposed to be the representatives of the people. So I'm wondering how come this legislation went through the National Assembly. I never had any dissenting voice from the National Assembly until this is put on. And all these taxes I mentioned, mind you, and that is what makes a lot of difference between this and other taxes. Most of those taxes are on profit. In other words, you'll have done your business, made some, take away your costs, declare profit, then you pay tax on it. But this one is on all your transactions.
And this is emanating from the Cyber Crimes Prohibition Act of 2015 amended.
Yes.
So perhaps, it's from 2014 and then amended to 2015. Did we miss, the implementation of it, and then we just have to start implementing it now?
No, I think this new levy is likely to be part of the amendment. And by the way, I'm not even aware.
2015, it's amended 2015.
No, it's an act of 2024. Okay. This one, yes, act of 2024. So I'm not aware when whether there was any public hearing, whether they listened to the stakeholders on this, it's a major concern. And in any case, we are not talking about small amounts of money here. If you do a transaction, say, of 1 billion, I'm talking of fairly big business, 1 billion naira, you are going to pay a cyber security levy of 5 million. If as a big business, you do a business of, say, 100 billion, you are going to pay 500 million. How much profit are you going to make from the business? You have not talked about other taxes. And in any case, if you look at the base number, we are talking about electronic payment. The latest figure from the NIBBS or NIBSS.
NIBSS.
Yes, as at 2023, e-payments data was 600 trillion. So if you are taking 0.5% of that, you are talking about close to maybe 3 trillion. Even if you discount it to, make allowance for all those exemptions, you are still coming to close to 2 trillion. So, are you going to now use 2 trillion to fight a cyber crime?
So, even the fighting of the cyber crime it should also come to question. So this is going to be sent into the cyber security fund, and used by the NSA, the National Security Advisor, and all of that. And a lot of people will say, okay, if this is to protect businesses, even before now, what role have we seen the security advisor of the Office of the Security Advisor, what role have they been doing in fighting cybersecurity on behalf of the private sector? Perhaps that could justify, why we have to contribute to the existence and running of that cyber crime.
Well, in fairness to them, most of their activities are not very visible. They may be doing a whole lot underground because it's an intelligence-driven function. But even then, that cannot justify this kind of amount. The totality of budget for the entire security defense team in 2024 budget was about 3.3 trillion. I'm talking of the armed forces and the police. The total budget for infrastructure by the federal is about 1.32 trillion. And mind you, they are not likely to get the entire thing. Though there's a difference between appropriation and all this, the actual money they get. So how do you relate that? If you are spending 1.3 trillion for infrastructure. I'm talking of roads, railways, aviation, all the infrastructure that federal government is involved in. Now we are talking about close to 1.5 to 2 trillion on cybercrime or cybersecurity. This thing doesn't add up. And the important thing to make here is that it is important for consultations to take place within government. Because, and even with stakeholders, this is a democracy. Because I imagine the implication of this now, first for the cost of doing business. I imagine the implication for what the government itself is even trying to do to harmonize taxes. That Oyedele has been working day and night to say I can prune down the number of levies and taxes. He is talking about single-digit taxes. He has not even concluded his assignment. We are having this new tax.
And one would have thought that since we have a committee on tax reforms, then if there was going to be any introduction or adjustment, then the committee would be involved, being part of it.
That is what I expect. And not just even all the imagine the implication of this now for even this cashless policy. It's a complete negation of the cashless policy of government. And we have made a lot of progress. A lot of our citizens have been onboarded into this electronic platform. Now with this it's going to be a complete reversal of people's actions. Because if you are going to pay this much, just because you are, then you better go and be doing cash transactions.
So what are the options left for Nigerians now? This is supposed to begin like May the 20th.
The option is not for Nigeria. The option is for the policymakers, for goodness sake.
Yeah, but Nigerians are going to be affected. Can't they talk or something?
No. Of course, we are talking, and other people are talking, and more people will still talk. This is a democracy. This kind of law should be reviewed. I mean, it's too much of a burden. We are not talking of taxes on profit. Tax on all your transactions. I just told you by NIBSS, transaction was 600 trillion. And if you look at the data from the CBN, that's industry e-payment data, the data is showing, as at 2022, 1,550 trillion. 1,550 trillion. They call it quadrillion. That's 1.5 quadrillion. This is the first time I'm even knowing that there's something like a quadrillion. When you have 1 trillion, 1 trillion. So it is at least 1,000 trillion, 1,550 trillion. That's 1.5 quadrillion. So the point is that the amount involved in form of tax on the citizens, on businesses, is impossible. It's outrageous. So we have to go back to the drawing board.
So would you say that perhaps a smaller percentage would have been more acceptable?
No. We need to situate it within the totality of our priorities. I mean, how can you allocate over a trillion?
I think this kind of is a revenue source for the government, perhaps. And we know that the government is broke at this time.
This is not going into a common purse. This is just for cyber crime. I just told you, even the big security issue we are dealing with, the total budget for the security apparatus of government in 2024 budget was about 3.3 trillion. We are not talking of over a trillion just for cyber security. No. And if you must tax, I don't think this is the best way. You don't begin to tax transactions. Whether you are making losses, whether you are not making losses, whether you are a poor man, whether you are unemployed.
Whether it's a charity gift.
Yeah, everything is taxed. I think the burden on the citizens is extremely too much. And it has to be reviewed. And we need to call out our National Assembly. They are there to represent us as citizens. If this thing went through them, and I'm not sure the citizens were ever consulted, and we just have this kind of thing. So we need to look at it generally. We need to look at the implication for the citizens, for the cost of living, for the cost of doing business, for investment, for the welfare of the people, for the cashless policy of government. It's going to affect a whole lot of things. So my view is that this thing just has to be reviewed. We need to go back to the drawing board and have further consultation. We appreciate the fact that cybercrime is a very big issue, just as terrorism, armed robbery, and all of that. We also appreciate the fact that even infrastructure is a big issue. All of these things require funding. So we have to do some analysis around proportionality of even spending. How much you go and be spending close to 2 trillion on cyber crime and cyber security? I think we need to go back and review it. I mean, this is not something that should stand the way it is. I don't think so.
All right, Dr. Muda. Well, I think we woke up to this. I woke up to this circular this morning. And it's all over the social media, obviously, because I mean, talk about 0.5. That's 0.5% of everything you spend. You know, it's not even digits of 0.05 or something. It's 0.5.
As in multiples of transactions.
Yeah. So, but anyway, we'll stay on the issue. But thank you so much for coming on, Dr. Muda Yusuf, the Chief Executive Officer of Center for the Promotion of Private Enterprises.
Thank you very much.
All right, let's take a break. When we come back, we'll head to the market here in Business Incorporated. Stay with us. Welcome back to watching Business Incorporated right here on Channels Television. We head straight to the markets now with Will Ibong. And Will, the shocker that we had at the close of trade at the NGX yesterday, I don't think I'm over it yet.
No, I'm not, Ini. I'm not, because I was so sure the market was going to end in the green. At intraday, we saw that fantastic number.
Yes.
And then, whoa, Airtel Africa just came in and just...
That was a huge... I think they lost more than 200 naira.
They lost about
on
220 naira on each share, and that was a huge one. That drove the market. It just nosedived, back to 98,000
Not even 99,
points.
yeah.
Back to 98,000 points.
I mean, I don't think I believe the number at first, but, well...
We'll see how we can crawl.
It is what it is, as they say.
Negative sentiment is still permeating, but we'll see if we can crawl out of that. So we begin, as always, with major equities in Africa, where sentiments were mostly positive at intraday, except for Nigeria's NGX, which you saw negative sentiments. At intraday, that's at midday, it was trading at 0.28% down, 98,000 points. We saw some stocks like Dangote Sugar weighing down this index, but we did see some gains from Presco and Zenith Bank and the rest of them. But South Africa, however, at intraday was up 0.11%. Elsewhere, Egypt EGX resumed from the holiday with positive sentiments at intraday. It was up 0.12%, and we saw Kenya closing Monday's trading session in negative territory. Now, today we're going to be discussing a major milestone in Ethiopia's economic journey. Last month, Ethiopian Securities Exchange had successfully closed its capital raising exercise, and about 1.51 billion Ethiopian birr, that's about $26.6 million, was raised in capital, exceeding expectations by 240%. Joining us is Mr. Tilahun Kasahun, Chief Executive Officer, Ethiopian Securities Exchange, ESX. Good afternoon, sir. It's good to have you on the program.
Good afternoon, Will. Good to have you as well.
Mr. Kasahun, first of all, congratulations on exceeding your capital raising target by 240%. We started this conversation in January, I remember clearly, and it's been quite a journey in between roadshows across Addis Ababa, Nairobi, and London. You set out to raise 631 million Ethiopian birr, but ended up with 1.51 billion birr. What does this achievement mean for Ethiopia's first securities exchange? Do you attribute this success to the confidence of investors in the ESX?
Thanks, Will. Yes, exactly. It's perhaps very much exciting milestone for us, and it's a pleasure to be with you today to talk about this. At least, when we were talking in January, I must say we were very much confident we will raise the capital that we want, but we do not expect to exceed it by this much. And I think it's perhaps a testimony of the fact that investors, as well as other players in the capital markets ecosystem in Ethiopia, have perhaps voted through their investment for the successful launch of the exchange, more than their capital and investment contributions. I think it's also a result of perhaps a broader consensus that's built around the exchange across all the investors and all the stakeholder players. If you see, especially our investor base, it cuts across both financial and non-financial institutions, including foreign investors, including the Nigerian exchange group. So, broadly, I would say, it's a plus to have, both our banks, insurance companies, non-financial institutions that are domestic investors, but also foreign investors in the shareholder base of the exchange, and we're very much glad and I would say fortunate to have closed the capital raise successfully in a very short period of time.
Diverse investor base there. How do you see this diverse base of investors contributing to the growth of the ESX?
Good. I mean, I'm sure, especially looking at ASX from Nigeria, it's very much unique in a sense, compared to the Nigerian experience, where you have the Nigerian exchange group and also FMDQ and NASD. You will see ESX is trying to bring all three types of markets in one place. So perhaps especially the significant involvement of the financial institutions in Ethiopia. About 16 of all the major mature banks are investors. Around 12 insurance companies are investors in the exchange. This already tells you that our debt market, our fixed income market would be in a very strong footing. And that's something that is very much particular and peculiar about the exchange, which is our intention to build a very strong debt market, fixed income market that serves financial sector players in Ethiopia. And one of the things that we want to do here is obviously be a platform for interbank money market. We would like to have a transparent repo market that would serve as a piping for our short to medium term debt instruments. And this is really important, and you cannot achieve a debt market without the involvement of banks. And we're very much happy that the majority of the Ethiopian commercial banks are part of our shareholder base. And the same thing is for our equity market. We start with the Ethiopian Investment Holding, government sovereign wealth fund that is playing the promoter role and playing a key foundational role for the exchange. 25% stake is allocated for government of Ethiopia through this Ethiopian Investment Holding. The Ethiopian Investment Holding brings with itself majority of the state-owned enterprises. So we're very much confident that most of these enterprises progressively will come and list on the exchange. As we speak, as of last month, EIH has made it official that about 6 of the state-owned enterprises will come and list on the exchange. We've been doing some preparatory work for the past few months around some of these SOEs. In addition to EIH and its subsidiaries, we have about 17 non-financial institutions that are mostly engaged in manufacturing service sector operation in Ethiopia that are also shareholders of the exchange. And I would say I think majority of these investors, in one way or another, look at ESX as a platform to raise capital, to reform, to change, and perhaps to revamp their corporate governance standards. So in a way, I think this is already a solid foundation being built for our listing pipeline. So very much, a kind of investor mix that you want to have while you are establishing an exchange.
So what do you think is the most significant impact that the ESX will have on the overall growth, that's the Ethiopian economy, in the next 5 to 10 years? What do you project for, how do you see the ESX contributing to Ethiopia's growth?
So good question, right? So at the end of the day, exchanges will be measured not by the amount of capital they've raised, but by the amount of capital they help governments and private sector raise. So we measure our impact, one, on the way how we will create depth to the way government raises capital from domestic sources primarily, and also attract foreign investors, foreign portfolio investors into government instruments. To date, we do not have very much mature experience around the space. We have very much limited issuance in terms of treasury bills by central bank. So we would like to diversify and deepen both the types of instruments that are issued, but also the types of investors that are participating in these instruments. For instance, you have hardly any retail participation, any mutual fund participation into these instruments. Very much, almost zero participation, foreign investor participation into this instrument. So that's something that we would like to see happen in the next 5 to 10 years. In fact, very much in a short period of time. It's the same logic for private sector, very much limited scope for private companies to raise equity capital. Currently, almost, we have about more than 2 million SMEs, business enterprises in Ethiopia, but limited to bank finance, self-financing, etc. Our equity markets, we have a very much informal, unregulated OTC market that has raised capital for the past 30, 40 years. And we would like to expand the space in a regulatory environment, attract and create confidence for domestic institutional investors, but also foreign investors. So, at the end of the day, our goal is to contribute to this huge financing gap that both government and the private sector have.
Okay, so are there you mentioned some challenges now, but are there any key challenges facing the ESX ahead of the launch in the last quarter of this year?
Yes, obviously. So as a young nascent market, the exchange cannot operate on its own. The past 2 years, government of Ethiopia established the Ethiopian Capital Markets Authority. The exchange is being set up as a public-private partnership. But at the end of the day, you need to have an ecosystem of players, service providers, investors that are coming along these two institutions and obviously playing in the market. I think one of our key challenges is attracting those service providers, especially at a time when Ethiopia never had a properly regulated capital markets environment. So all our security brokers, dealers, investment banks, etc., will be born new. Some of them are getting licenses, so that will be a key capacity building program that we have to launch and implement. The other angle is obviously issuer readiness, huge appetite from private companies, public sector, municipalities to raise capital, but at the end of the day, their ability to deliver for investors in terms of transparency obligations, corporate governance, etc., will remain to be a constant challenge. It's something that the exchange have to actively work on and in terms of developing the capacity. I think most importantly, the success of our capital markets would be, again, measured by the speed with which we develop the domestic institutional investor base and also create the right types of environment for foreign investors to actively come in and confidently invest into the market. So plenty of regulatory reforms that needs to happen and already are happening. And again, something that the exchange needs to actively work on and develop.
Thank you so much, Mr. Kalahun. Kasahun, we do know that when there are challenges, there are opportunities and opportunities for potential investors to come in. Thank you so much, Mr. Tilahun Kasahun, Chief Executive Officer, Ethiopian Securities Exchange, for coming on Business Incorporated.
Thank you for having me, Will.
So we move on to other markets. Middle East, we see the markets there were mostly negative at intraday. Abu Dhabi trading up 0.38%. Dubai, however, on the flip side, 0.02% down. And let's look at Saudi and the Qatar indexes. We see them down at intraday, quite bloody there, 0.26 and 0.24% each. Let's look at quickly now US markets and see how they performed in early trade today. We see the Dow up 0.21% and the S&P 500 futures 0.05%. Nasdaq futures slipped 0.15%. Investors have been bullish on the stocks ever since the lower jobs data, on hopes that the Fed will start cutting rates sooner than expected. Now, Tuesday will be relatively quiet on the economic front, with just consumer credit data from March scheduled for release later today. Meanwhile, Wall Street will be looking towards earnings report today from Disney, Swiss Bank, UBS, and now all giant BP earnings came in today, and the company reported lower first quarter profits, citing weaker oil and gas prices. Let's look to Asia now. South Korean stocks dominated that, led gains in that region. We see it up 2.16%. We know that they were on holiday, national holiday yesterday with Japan, but today they're coming on strong. We see Japan also closed 1.5% up, but the Hang Seng index in China was down more than 0.5%, and we also see that mainland China, if you see that mainland China also, but mainland China headed positive territory. We see that in the green, but we see the Reserve Bank of Australia also holding benchmark interest rates at 4.35% for the fourth meeting in a row. And we see that the S&P ASX 200 jumped after that news. The decision is coming after that hold for interest rates. Investors, analysts are saying that inflation is slowing in the country and they're expecting it to slow further. Even though inflation is still high, it is still slowing, and that's the reason why they held rates for the fourth meeting in a row. So we're just going to be expecting bigger news from Australia, seeing that the inflation is going down, but they say they're still far away from the 2% target that they have.
Yeah, well, wish them the best and also wish us the best. Thank you so much, Will. Let's head to London now. We see house prices are back again in the news. This time it's steady in April with higher mortgage rates. And Juliana will always tell us this is where residents feel the pinch the most. Hi, Juliana. Good afternoon. So we're talking house prices again.
Good afternoon, Innie. That's absolutely right. We are talking house prices, and I think one of the reasons why is it's because it's seen almost as a bellwether of the wider UK economy, which of course is under the microscope now, because we're just still in a technical recession. Hopefully we will be out of that, but we're still waiting for data. So we have had some data from Halifax, the house price index, earlier this morning, and it does show that month on month house prices have ticked up by a couple of £100. It's still incredibly expensive to buy a property in the UK, and if you've got £288,949 in your back pocket, you may be able to buy one. Now, I think one of the reasons why this particular data is so important is because we are going to be having an interest rate update from the Monetary Policy Committee on Thursday when they meet at Threadneedle Street. Now, we know that interest rates in the UK are incredibly high at the moment. In fact, eye-wateringly high at 5.25%. We had all predicted that perhaps we would start seeing a fall in rates. That's not happened yet, despite the fact that inflation has fallen in this country to about 3%. We're not expecting interest rates to fall until August. How does that impact house prices? Because, of course, if interest rates are high, it costs higher to borrow. Very difficult for somebody to bring out £290,000 from their account. They're typically borrowing on that mortgage. So what we had seen a couple of months ago for quite a long, lengthy period is that house prices had fallen or had stagnated because perhaps first-time buyers or buy-to-let landlords were managing their expectations, right? So they weren't going in for those big houses. They were going for flats and smaller prices, which has been indicated in the data because it does show that some of the fastest rising properties in this country are smaller properties and those for flats. So a lot of market analysts are suggesting that perhaps the housing market is now getting used to elevated interest rates in this country, which is why we are starting to see an uptick in properties. But again, you know, if you are trying to get on the ladder, even though this is the lowest that we've seen in recent years, it's still incredibly high. And of course, if interest rates are going to start lowering in the next couple of months, perhaps house prices will rise even further, still to come.
Yeah, just like we're waiting for that interest rate cuts in the US too. We're looking for that in the UK. But heading to the market now, BP, they didn't meet up with the target, the profit target, and yet they still have this buyback share still going on. Maybe tell us what else is going on. I know it's a season of earnings everywhere.
It is a season of earnings, Innie, and you're absolutely right about BP. Quite interesting because, of course, we know that the war in Ukraine at one point saw a surge in oil and gas prices across the entire sector. In fact, I think market analysts were calling BP and Shell's profits this time last year extraordinary. A trading update. It hasn't been extraordinary this year, although they still managed to bank $2.7 billion in profit, but quite shy of this time last year, which was about $5 billion. Again, you know, they're pointing to what is happening in the oil and gas industry. I think Saudi Aramco, which is the biggest crude export, they also released their trading update for first quarter earlier this morning, and they have shown that their profits have also fallen by about 14.5%. I suppose depending on the region, the reasons are quite different, but in terms of what's happening in Riyadh, I think that's because they deliberately decided to shortcut their production to about 9 million barrels per day. They, of course, can do up to 12 million barrels, but it just goes to show the changing face of the sector. Also, as well, for BP, slightly different issues they have in compared to Aramco, because, of course, they're much, should we say, loved CEO Bernard Looney. He was ousted, wasn't he, in September over some relationship allegations he had within the industry, well, within BP. Now, his successor, Murray Archinclossis, he is now on a cost-cutting objective. He's got to save about $200 million over the next couple of years. He says he's going to be doing that with digitization. In fact, in terms of the trading update, I think BP put aside a couple of $100 million in terms of their cost-cutting drive. But in terms of the numbers are looking good in the UK at intraday. A lot of this has also got to do with some data we received from the construction industry showing that construction output in the UK has increased by the most it has over the past 6 months. Really good news, because we're waiting for that all-important GDP data so we can finally get ourselves out of this technical recession. So if we have a closer look at the numbers, the all-share INI, it's up by triple digits, 1.01% at intraday. The FTSE 100, it's up by 0.98%. And the FTSE 250, the domestic market, that's up by a whopping 1.09%. In the currencies market, the British pound is trading down against the US dollar. That's because of the uplift in the FTSE 100. It's down by 0.20%. The British pound is also down against the euro by 0.15%, but the pound is up against the Japanese yen by 0.02% at intraday. INI.
Thank you so much, Juliana. Good to have you. All right, now let's go to Berlin. And global trade is not all smooth these days. Juliana did talk about, that regional tension still going on. There's also the US, the EU, and their Western partners. Seemingly constant battle. We told you about China and the EU the other day. Red Sea is not a place to go to now. And this affecting EU trade. Lars Holter has the details. Hi, Lars. Good afternoon.
Well, thanks for having me, Ini. The latest comes from Danish shipping giant Maersk, one of the biggest firms in the business, so big indeed with 730 container ships that it is widely seen as a bellwether for the industry. And they've just said that the ongoing disruption to container shipping traffic in the Red Sea is actually increasing, and that it is expected to reduce the industry's capacity between the Far East and Europe by 15 to 20% in the second quarter. Maersk says that it has diverted vessels around Africa's Cape of Good Hope since December. That's, of course, when Iran-aligned Houthi militants began attacking ships passing through the Bab al-Mandab Strait. That is the southern entry point into the Red Sea. And that strait is just about 20 kilometers wide at the narrowest point, giving rebels a relatively easy chance to attack ships passing by. And to avoid any such attacks, Maersk and other shipping companies were forced to reroute their ships around Africa.
Yeah, that will obviously affect trade. But let's head to the markets now, see what investors are doing.
Well, today earnings numbers are front and center. There's 4 DAX-listed companies out with numbers, and for the past week or two, numbers have actually been a bit better than some had expected, and it's helped the DAX cross over 18,000 points where it currently sits. But today numbers are mixed at best. Siemens Healthineers turns out to be a bit weaker than expected. Shipping service DHL has seen profits drop, and from the chip maker Infineon, we're hearing that they're seeing weakness too. They are lowering their outlook for the year, and they talk about cutting costs.
All right, Lars, thank you so much for that. Heading to Africa now, the World Bank has approved a loan of $138.5 million to Namibia, and that's to enhance the transmission network and incorporate renewable energy projects into its grid. This was announced by the World Bank. Namibia is one of the driest countries in sub-Saharan Africa, with abundant sunshine. Wind also is abundant there, and they aim to establish themselves as a hub for renewable energy. This ambition coincides with significant offshore oil and gas discoveries that have made the country a focal point for global exploration. And in Kenya, railway operations have resumed. This was announced by Kenya Railway Services, and that commuter train services on 4 routes had halted operations because of the flood. In a statement, the KR managing director stated that the 4 routes, which include Embakasi Village, Lukenya, and SGR Link Train, and Soigmaku, will resume operations on Tuesday. That's today. However, the MD states that the community services for Limuru and Ruiru remain suspended because there's an ongoing track repairs in that area. And we come to Nigeria, where the Nigerian Electricity Regulatory Commission, NERC, has reduced the exchange rate for calculating the current electricity tariff for Band A customers by 16.03%, from 1,463 naira 30 kobo for a dollar to 1,277 naira 80 kobo, and that's from May to December. This was revealed in the Commission's multi-year tariff order, that's the MITO, for May to December 2024. And NERC's MITO was reviewed following the appreciation of the naira in the foreign exchange market in the last 1 month. Yesterday, we told you how Zimbabwe has started the circulation of its new currency. That's the ZiG. Well, today we can say that, they are now set to value their budget for 2024 in the new ZiG. And this is supposed to start from the beginning of June. And so we see the accountants general working on this and promising that it will be reviewed and shared by the 1st of June, having the budget, the 2024 budget, in ZiG. We now head to the crypto space now and see what's going on there. I can tell you from the side of my eyes that it's a red board that we have today. Very, very different from what we had yesterday. Talking about a flip, but it's just 1.7%, and we know that the market is very, very much alive. So we see Bitcoin is down now from 65 we had this time yesterday to 64,141.21. It's down 1.7%. We see it mostly red. Solana managed to escape that, $157. XRP, Cardano, AVAX, all of them are in. Of course, Ethereum follows BTC, and so it's down. Also at this time, market was more than about 70% in greed. If we're looking about the index yesterday, but today we see it's dropped to 68, even though it is still greedy. But I think the biggest news in Nigeria is that announcement by the Director General of the Securities and Exchange Commission. A lot of people, when he came in, is less than a month old in office, were like, oh, what's his stance with cryptocurrency? And there seemed to be a lot of optimism. But I don't know if this will come as a shock that he's asked that members of the crypto community in Nigeria name and shame players involved in the manipulation of the naira. And the biggest part is they're looking to delist naira from every P2P platform available in the country. Let's have Solomon Amunde now. Tell us what the community, crypto community, has been discussing around this. Hi, Solomon. Good afternoon.
Good afternoon, Nini. Good afternoon.
Yes. So what have you guys been discussing, crypto community, about this? I don't know, intention, proposal to delist naira from the P2P.
Okay. The negative impact this would have on the crypto ecosystem is it will slow down the pace at which the ecosystem was growing and the pace at which we're having new persons onboarded into blockchain and crypto ecosystem, and also it will affect investment in one or two ways. But talking about those that have been around this ecosystem for the longest period of time, about since 2015 to 16, before now, actually, there was no way that people could be able to do P2P online, but they were doing it via other means, making use of social media platforms like WhatsApp and some other channels. So I would say it would be very, very difficult, even if the government were to delist the NGN pair from all exchanges. P2P goes beyond just exchanges. It has to do with people transacting at their own deemed or desired rules and regulations. So it will be quite difficult for the government to crack it down to the barest minimum. So in summary, I would say the OG traders, they are not very much affected by this because they have their ways that they make use of to do P2P transactions. But it's the newbies and those that are still in the ecosystem that it will affect the most, sadly.
All right, Solomon, I know this is an ongoing conversation. Thank you so much. But I think the SEC DG has also invited the community into more conversations. But thank you so much for sharing your perspective with us this afternoon.
All right, thank you very much.
So that's it on the program. Thank you so much for being a part of Business Incorporated. Do remember, you can always watch this program and Business Morning anytime you want. Go to www.youtube.com/channels web and then look for Business Morning or Business Incorporated, and then you can repeat this experience at any time. We'll have a lot of ongoing conversations waiting for us. POS is back in the news. You don't want to miss it. We'll handle that tomorrow. So join us. Business Morning, Business Incorporated. I'm Ini John Mekwa. Bye-bye.